Hello, Jim here. I've been on a journey to learn the right way to trade options, and in the process, I've been able to make quite a bit of income on a monthly basis. Last week, I actually did part one of this series of videos where I talked about how to get started, how to set things up with a broker, and how to make your first trade. If you haven't watched that video, you may want to take a look. I'll have a link up above or at the very end of the video for accessing it. In this video, I'm actually going to share with you what's the most logical next step. And I believe the next logical step is the option wheel. It's a great way if you have small accounts or just want to make some really good income. I'm going to talk about how it works, and I'm going to share with you what an actual trade looks like in the option wheel strategy. So stay tuned. I think it's going to be well worth your while. Okay, let's go ahead and jump right in. Now, from part one, I primarily talked about finding a good broker, picking one of the big boys, and then potentially using some kind of feeder accounts, especially if you get a little bit of grief about being able to sell options. You know, they won't give you high enough option access. You can always use one of the other brokers like Robinhood or Tasty to kind of learn the basics and then reapply to get a higher access at a Schwab or a Fidelity. And then I went into talking about the option chain and how to, pick the right expiration and the right strike prices. So if you want a little more detail about that, be sure to go back to that previous video. In this video, it's going to build off of what you learned in part one. I'm going to share with you kind of the big picture of what the option wheel is, but it starts with selling a cash secured put. And again, it's critical to find the company or find a company you really want to own, a company that you like. It just makes it an easier process. Maybe you don't really care to own the stock and you're just using it to bring in money. If it's assigned to you and you do like the stock, it just makes it easier to deal with. I kind of run the option wheel a little bit different than a lot of other people. I end up keeping a lot of the stocks that are assigned to me, but that's not necessarily the best way to do it. So when I talk about running the option wheel in this particular video, it's not necessarily to keep the stocks. It's more to really generate a lot of income. It can especially help people with small accounts. So again, starting off the process, just a quick overview of what the option wheel is you sell a cash secured put on a stock or an ETF that you want to own. Then if it gets assigned to you and you own those shares, then you sell a covered call. And the same scenario, if it gets assigned away from you, you end up with the cash from the assignment, then you can start the whole process again. And it works like a wheel. You keep running it and generating cash along the way. Now, if you pick the right kind of stock that has really good option volume and open interest, then it can generate a significant amount of income. I'm going to share with you kind of an example of what that would look like using the stock I talked about the previous video, Square, which typically has really good volume and really good premium. So what's also really interesting about doing the option wheel is you don't necessarily have to worry as much about the price of the stock. If you're picking the same deltas, and that's what you typically do, if you want to make more cash and you definitely don't want to own the stock, then you'd go with a higher delta. You'd pick like a 45 delta, 30 or 40 or 45 delta. And the higher you go on the delta, the closer you get to the stock price. And because of being closer to the strike price, you bring in more income. So you can kind of gauge how much income you want to take. I typically in the past have used the 30 delta, but I'm considering going a little bit higher, maybe doing a 35 or 40 delta to really generate a lot of income, and then trying it with one particular stock, again, Square, and just running it on a monthly basis. Now, what kind of makes it a little bit more difficult at times is if you don't get assigned, then what happens, say you sold the cash secured put and expiration comes up and the stock keeps going up, well, it will not be assigned to you, but you get to keep that premium that you earned. And then at that point, you sell another cash secured put. And that can happen a number of times until something happens in the market where the economy and the stock drops big time and it does get assigned to you. So in some cases, you may find that you're running cash secured puts 3, 4, 5 times before you actually get assigned. Now, if you are doing it an excessive number of times, then it might just mean you need to take a little bit more risk. So maybe you will go from a 30 delta to a 35 or a 40 delta. And then you'd be more likely to be assigned the shares. And the same thing happens with covered calls. Sometimes the stocks don't move much, so you end up, again, selling covered calls, and you get to keep that premium if it doesn't get assigned away from you. But at some point it will, especially, as you run the wheel more and more, you kind of increase your risk or increase your delta. Again, emphasizing you don't really care to own the stock. You're just trying to generate a lot of income. And then by going with the higher delta, your chance of being assigned is a lot higher, because the higher delta puts you closer to the strike price. So if it's a $100 stock, and you have a 45 delta, you're probably going to be really close to the stock price, maybe $95 or $98. But you end up bringing in so much cash that it adds up quite a bit quickly. And I've one interesting aspect of this, if you're like me and you're doing most of your trading in your retirement accounts, then you don't really have to worry about taxes, and you don't have to worry about what's called the wash rule, where you can't resell a particular security within 30 days. You typically have to wait longer than 30 days. But if you trade mostly in your retirement accounts, then that's not an issue. Now, if you're trading in a regular account, a taxable account, then you do have to be careful. That's where, instead of, doing it weekly or every other week, I would look at monthly or maybe every other month. So instead of having, 10 or 12 trades in a particular year, you would have maybe 6 trades, but you would still do really well. But again, you would potentially be at risk for that wash rule, plus the capital gains. You would be hit with the capital gains. Having it in a retirement account, you are able to avoid those kind of taxable events, which can be a pretty big deal. Another important point about the option wheel that I kind of want to give people a perspective of is, you can kind of design it the way it'll work best for you. You don't necessarily have to, stick to a particular delta that someone else is using. You can pick a delta that works for you. I talk about this a lot in my memberships. I talk about when people review my trades after I've posted them, that they should make a decision on their own. They may want to go with more risk, less risk. They may want to go farther out. They may want to bring it in closer. I do add some details about what, if it was a new trade, especially if I was rolling, if it's a new trade, what strike I'm encouraging them to potentially look at, and maybe what expiration. But just like, with normal trades, when you run the wheel, you can kind of, design it to work best for you. You could pick a delta and a certain type of expiration. I like to go out like from 40 to 60 days. And then I also like to start managing the trade within 21 days. And that's how I like to do it with the wheel too. Now, in the past, I've taken a lot less risk. I've even done a type of option wheel that's called the shielded wheel. And with that one, I actually bought 100 shares, and I would do the wheel with one contract. And then if that got assigned to me, then I would again do one contract, meaning I've already owned 200. And I've even run the wheel, especially during trying times, with vertical put credit spreads versus just cash secured puts. So I know I'm going into a little bit too much detail here, especially for a beginner video, but the emphasis is, nothing set in stone. You need to kind of modify it and set it up in such a way that it works best for you. So that being said, I do like to mention that I do have a growing membership. I have a lot of people who are trading. I have people who are doing 0 DTE trades, futures, all sorts of things, primarily in my Discord, which is my middle membership. It's called the Active Traders Club, or the Traders Club membership. And I also have an Investors Club and a Coaching Club. So details about those will be in the description if you want to take a look. Like I said, they are growing. I am going to do a price increase beginning in November, so I encourage you to take a look before November 1st when prices will go up. So, and as always, please subscribe, hit that like button. I really want to get the word out there for people that they can learn this on their own, and it can make a world of difference for early retirement or for just financial independence. It's been wonderful for me learning how to do this. And it's kind of a journey, like I said before. I'm still learning. I'm learning from my members and I'm learning from even other influencers. So let's jump into the next part where I'll share with you what the trade kind of looks like and what kind of premium it can bring in. Okay, I've set up a spreadsheet where I want to talk about what a square wheel trade would look like. So in the video last week, I shared a cash secured put at two different levels. One was with a 29 delta, which is this one in green, and the other one was a 17 delta. So this trade here, this cash secured put, which was for a strike of 55, one contract, expiring on 11/15 with a 17 delta. This is kind of the trade I like to do if I, don't really, not that I don't want to own the stock, but I really want to get a really good price for it. And I'm not really running the wheel. I'm just trying to earn cash, but also trying to pick up a stock at a cheap price. And that's why I mentioned here better assignment avoidance. But you can see it's brings 141 in premium. It was a 17 delta. This was from October 3rd. Now, if you were going to do the wheel and you take a little bit more risk, and again, the idea is to turn the wheel and generate more and more cash. In this case, you would do a 60 delta or a 60 strike, which is almost a 29 delta, expiring on the same day, but it brings in almost $130 more in premium, so $269 in premium, and the required capital because it's a $60 strike. So I'm taking more risk. The $60 is closer to the $65.35 that the stock was at that time. In ROI, it's like a 40% return, again, because I'm taking more risk and I'm earning a lot more cash. So that's just literally the 269 divided by the 557.31. And like I was saying before, this is better for the wheel. Now, what would happen is I would have that cash secured put. It would be in my account. I'd be able to monitor it. And then I put 10/10 because that's today, and I actually have some numbers for today. But let's just say that Square drops and an assignment occurs, but then it rebounds. So I end up owning the shares. They get assigned to me at 60, but I've already made 269. So my cost basis is 57.31. So then at that point, I sell what's called a covered call. And it's just like a cash secured put, but instead of selecting the put, you're selecting a call. So it's sell to open a call. And in this case, again, I'd be doing a 27 delta, so closer to 30, which would be a strike of $80. So, at the time, Square is 70, but it could potentially be $80 in another month. I would bring in $203, so the total would be the 269 plus the 203 would be 472. And then the required capital would go down by this additional $203. So at that point, I would own 100 shares. My cost basis would be 55.28. And then say I want to close, meaning it doesn't get up to 80, but I can close the covered call. If I sold the $70 shares, I would make an additional $14.75. So my balance would be $11,475, assuming I started with a $10,000 account. I forgot to mention that at the very beginning. So you can see in literally a month, I could potentially have made $11,475. Now, for that to have happened, Square would have had to drop. It would have had to be assigned to me. The other scenario is it doesn't drop, so Square goes up and it's not assigned. So at that point, I would sell another cash secured put, and I could do it at two different times. I could wait until it expires, or if Square continued to go up, I could potentially close the existing one. But in this case, I'm just going to assume, well, we waited and we're opening a new one. And again, I would sell this time a $65 put 30 delta. The stock did go up a bit. It's now $70, not 65. I would bring in 288 in premium, and then total I would have brought in $557, and my cost basis would be 5943, which is just the 557, the 6500 minus the 557. So in this case, at the end of the first month, my total premium would have been 557. So I would have a balance of 10,557. Again, assuming I started with a $10,000 account, starting out. So, and then before I jump into that, I did want to share with you what this looks like in Schwab. So last week we did Fidelity, but here you can actually see Schwab. This is, you get here by selecting Greeks. This is their normal portal. It's not Thinkorswim. Maybe I'll do the next one with Thinkorswim, but here I'm showing the Greeks for the November 15th, and I can see here this column shows the Greeks. So here's the $29.50 and the $65, and here's the different premium. Now, what I was talking about before is I could take more risk, and I could potentially sell a 36 and bring in almost $100 more. Actually, it is right about $100 more. Or I could go with 44 delta. It would be $70, but I'm bringing in 480 to 485. So again, we jumped another $100. So I could potentially sell this 70 put and bring in 480. So again, it has really good premium, and it's actually down because Square is up today. You can see the market's still open. Same thing over here. I can look on the call side, and when I'm ready to sell a call, I can also do between a 30, a 28 delta, bringing in 200, a 34 delta, nearly 35, about 269. So about $60, $70 more. And then again, another 60, about $80 more, 70 to $80 more. So same thing on the call side, that I can bring in some pretty good premium. And what this looks like, so here's what it looks like in Schwab, and you can see the market's actually active. So I would do a sell to open one contract, like we talked about before, Square. You can see I also have the strategy of put. I like how Schwab does this. You can see all the different strategies that you might want to choose, and they fill everything out for you. And you just then change values. So you can do a vertical put, you can do an iron condor, you can do a custom 4-leg, you can do all different types of strategies once you've gotten used to them. Then you set your date, 11/15, and here you can actually see, well, I want to take more risk, so I do 67.50, and you can see this is for one contract. That's what I mean. Square has really good premium. Or I could say, well, I want to take I'm going to go right at the strike price or right at the stock price. So I'm bringing in around $485, which means I'm picking that up at $5 off. And then, the reverse is true. If it gets assigned to you at 70, then you can turn around and we can just change this to a call. And you can see here at 70. So if it got assigned to you and you own the 100 shares at 70, you could turn around and sell a $70 call, bring in another 535 to 545. In a matter of a month or two, you would make about $1,100, or you could just go up a little bit just to bring in a little bit more. I think I showed 77 at one point, or 75. Still really good premium, and we're only about 33 days out. So if we come back over here, you can see, this is all within a month. If you did this 8 to 10 times a year, you would bring in close to 40 or 50% on a yearly basis. And if the stock is growing and you're able to go with higher and higher calls and you get assigned at higher and higher prices, you could potentially do even better. So what are some of the key points from this is, should you do the puts and calls with higher delta? I think it's something to consider, but you could first try one contract at a lower delta and then move up to a higher delta and see how it works out. Now, I like Square because Square hasn't moved like crazy. It would be a little bit harder to do it on something like NVIDIA or a Palantir. But definitely, and this is what I'm thinking about doing myself. I may do this with a couple of contracts on Square and just see how it goes. Should you do it weekly, or would it impact the wash rule? Before I mentioned that if you're in a retirement account, it doesn't matter. In a taxable, you would definitely need to go more than 30 days out. So I think just doing monthlies, you would avoid that automatically. But just something to keep in consideration. I probably would only do this in my retirement account, and probably my IRA does not apply to retirement accounts. So better to do in retirement accounts. That's what I was already talking about. And what stock should I use for the real test? I'm thinking Square, but do you guys have a recommendation? Is there a stock you might think could also work well, like maybe PayPal, or like I said before, NVIDIA, and some of those are a bit too pricey. I could do something like Broadcom, or even something along the lines of Google. Let me know what you think. Leave a comment or a suggestion on, and I'll share this in a future video, but I'm definitely going to start doing this with a much higher delta, with not wanting to keep the stock, just because I've never done that. I've always kind of, tried to keep the stock and, to earn the dividends. But this is definitely a different avenue, and it may bring in quite a bit more money. So again, thank you for joining me, and let me know if you have any questions or if I missed anything. Thank you.